Welcome to Tramlines, a podcast from Agri. I'm your host, Tony Smith, putting your questions to the experts. In this episode, I'm talking to Paul Pickford, who is a farm business consultant. Today, we'll be asking some key questions concerning the Sustainable Farming Incentive and how this scheme fits with the BPS being phased out. The key questions today will be how can farmers navigate through probably the biggest changes in farm income support schemes in nearly 50 years. And this episode qualifies for BASIS and Naroso points. Hello, Paul.
Hi, Tony. Thank you for the introduction.
So, where do we start?
Well, I think, Tony, we probably start with the current scheme, and I mean it's fairly well written down now. But the basic payment scheme, which has supported farmers in its various iterations since 1993, really, is being phased out by 2028. 2027 is going to be the last payment, and that won't amount to very much. We've seen 5% for the smallest farms, rising to 25% for the larger farms, taken off this year, and then pretty much to each of those a further 15% is added until it's all gone. So for a 250 hectare farm, they'll be down about 5,000 this year. That then increases by about £8,500 every year until it's all gone. So that's going to put a fairly significant dent in the income for a full majority of farmers.
Yeah, sure, I can hear that. And so I can understand why farmers are so concerned, and obviously their advisors and agronomists too on their behalf. So where do we start looking forward? I mean, I've read up about the Sustainable Farming Incentive, but I can see that that's only a pilot scheme that'll be starting with only a limited number of farmers to whom it will be available. So where do we start to fill those gaps?
Well, that's right, Tony. I mean, SFI, Sustainable Farming Incentive, is part of the ELMS scheme that DEFRA. They call every new environmental scheme ELMS to get it off the ground, and then when you've got the hang of that name, they change it to something else. So we now have the Sustainable Farming Incentive. There'll also be a local nature recovery and a landscape recovery. But if we know little about the SFI, we know even less about those two at the moment. So we'll pass straight past those. The Sustainable Farming Incentive, there is a pilot scheme that is operational on farms today. Though to be fair, we've had very little interaction with the RPA on it, and left our own devices for the last month. We signed up, and I think much has happened. But we do know what we're meant to be doing. But perhaps of more interest currently to the majority of farmers, because the SFI is only going to really impact about 900 odd farmers. For the rest, there will be some of the options available to the rest of agriculture in England from next year. So if we have a quick look at what Sustainable Farming Incentive might mean as a pilot scheme, and then we can pick out the two main options that are going to be available to everyone else next year.
Yeah, sounds like a good idea. So take us on that journey, Paul, because already I'm learning stuff.
Right. Well, yes. Well, you and me both, to be fair. So, yeah, I mean, I'm not saying it changes with the wind, but it changes quite rapidly. The Sustainable Farming Incentive pilot was launched back in the early part of this year, and the agreement was supposed to kick off on around the 1st of November. You sign up for a 3-year agreement, and there are 8 standards to choose from. And for all but one of those standards, there are 3 levels: an introductory level, an intermediate level, and an advanced level. The exception being the farm woodland standard, where there's just a 1 level across the board. And the eight standards that they come up with, it's a bit of a list, so I'm going to rattle through it. I think there's an arable and horticultural land and an improved grassland land standards. There are arable and horticultural soils and grassland soil standards. That's 4 of them. There's then one for low or no input grassland, farm woodland we've already mentioned, hedgerows and water body buffering. So those are the 8 standards. So, and it's very much a pick and mix type approach for those people that are involved. You can go in for one or all 8 of the standards, or any number in between. and then you can decide at which level you want to go into. But it has to be said that if you choose the agricultural and horticultural soils, for example, you have to put all of your field parcels into one of the three levels. You can't sort of mix them up. And it's probably worth mentioning you haven't got to put the whole farm in. One of the pilot schemes that I've done this year, we put one of the block of about 4 farms in there, really because it's a pilot scheme. We want to try it. We want to see how it's going to fit for this business. So that's it. It's quite a that's if nothing else quite a complicated start to it, and it is going to mean that for every farm that enters into the SFI, the chances are they're going to have a different payment rate overall per hectare across their farm to their neighbours and everybody else, which is quite a diversion from where we've been in the past.
Yeah, and it feels quite different, doesn't it? I mean, I'm listening to what you're saying there. You're referring to both arable, horticultural, and grassland. So hopefully that encompasses all farmers. And also you talked about low input grassland as well. Does that refer to hill farming?
I think it probably does. It's again, I think it's supposed to be available to all farmers across England, Tony.
Yeah.
The hill farmers in particular will probably benefit significantly more from landscape recovery than others will, because the top tier, or landscape recovery as it's called, is really targeted predominantly at the marginal areas of the country, so salt marshes, moors and hills and those sorts of things. So that'll be leaning towards those farms more, whereas the local nature recovery and the sustainable farming initiative are aimed more at the mainstream. But SFI is open to all, but it's not sort of topped up with with a higher level.
Okay, and then there's these elements that you also mentioned in terms of the way land is managed. You mentioned the hedgerows, soil management, and the water buffering. So reading about the SFI, that's where it's really ticking that box in terms of impact on the environment and, I guess, the general public, because that's part of that hook, isn't it?
Yeah, it is, Tony. I mean, you always got to take a step back and understand that whilst the agricultural bill came out first, it is in many ways subservient to the environment bill, which received royal assent about a fortnight ago, and its emphasis on the enhancement and protection of public goods, so soil, air, water, biodiversity, landscapes, and protection from drought and floods are the majority of them. And a lot of the steps that are available in the SFI are aimed at addressing some or all of those problems. So, for example, the agricultural and horticultural land standard requires farmers to put at introductory level 5%, at intermediate 8%, and at advanced 10% of their land into a mixture of winter bird food, pollinator habitat, and pollen and nectar mixes as well. So you sort of spread those about, and it's 2% of winter bird food, 2% of flowers and pollinators, and 1% of habitat at the first level, and rises proportionally across there. So they are required to put some land aside, in some ways mirroring some of the options that are available under the stewardship scheme, but certainly presenting opportunities for biodiversity and for flora and fauna to thrive. The arable and horticultural land soil standard, on the other hand, is addressed at trying to reduce diffuse pollution. So taking steps to prevent overland flow, or trying to reduce and capture nutrients through cover crops and those sorts of things.
Right, very interesting. So it really is quite different, isn't it, to the previous scheme. How are farmers reacting to? I know you've been touring around doing lots of talks. How are they reacting to this to this message?
I think the majority of them understand that the BPS, the demise of the BPS, whilst financially not advantageous for their farming businesses, probably is a good thing, because realistically it didn't do agriculture as an industry any favours with the public. The alternative, this sustainable farming incentive, it's entirely voluntary, in as much as government handing out money is voluntary. So they haven't got to go into it, but it does. It looks like it's going to replace after costs somewhere between 30 and 40% of where they were previously under BPS. For perhaps for the more marginal farms, you might be able to creep that up to near a half. I would think for people with productive land, as a pilot scheme currently stands, 30 to 40% is probably a good target. How has it been received on farm? I think there's a lot of confusion as to what's involved for SFI. I think they had something like 2,000 or more applications to consider it, of which they got 900 odd people signed up. So a lot of people withdrew at some point in the process. And the pilot scheme was only open to those that weren't in countryside stewardship or the old environmental stewardship schemes. So it limited those that it was open to. And it's also not going to be available on farm for another 3 years. So the main body of the Sustainable Farm Incentive won't kick off until 2024. So I think there's a little bit of hesitancy to get too involved in looking at the detail. But when I talked through some of these options the other day up in Swaffham, we talked about the arable and horticultural soil standard in particular, and it was a professional group of farmers, and my advice to them was that they would all be signing up for the advanced level, because I really didn't think there was anything in there they couldn't achieve, which I think they found quite helpful and quite promising, really. I think the same would apply to the grassland soil standard. There's nothing there that can't be achieved very easily by a professional grower, for not a great deal of increasing costs. I mean, there will be some costs, some additional recording, maybe a few additional practices to take into consideration. There's a need to move towards an increase perhaps in cover crops, and some more direct drilling. But an awful lot of farmers are quite a long way down that road anyway, so I don't think I can't see it being an issue. Whereas the need to take land out of production for either the arable and horticultural land or the improved grassland standards is more a problem. I looked at 2 farms for the pilot. One of them was a bit of a struggle, but we managed to find 5% of the farm that the farmer said, yes, I can do without farming those bits. There certainly wasn't any more available. But there was one field in particular we didn't want to farm. There was some stuff down by river that was prone to flooding, and a few awkward corners and along the pylons, and suddenly you're at 5%. But for the farm I looked at in North Wiltshire, I couldn't get off the ground on that one. There was no way I could find 5% of the land that we were prepared to take out of production, and because the margin that's being offered for doing that, if you work it back, equates to about £560 a hectare of income. You've got costs associated with that, so you're very quickly back to a sort of a gross margin of £500 a hectare. Well, on both the farms I'm doing the pilot for, our average gross margin is well in excess of that, at least 50%, and in some cases 100% more than that. So why would we put good land out of production for a lower level of income? It made no sense whatsoever. The one in Warwickshire, it was a slightly more straightforward because we had this marginal land, we had this less productive parts of the farm. The one in Wiltshire, a far more uniform soil type, far more workable field shapes. Predominantly, they weren't difficult corners and what have you. And at £560 of income per hectare, I couldn't, in all conscience, to advise the client to take it out.
So what you're saying is that farmers need to not just know the farm, but actually the whole farm, the different areas of the farm, its strengths, where crops are performing well and maybe where they're not performing so well. So this really is quite an intricate process.
Yeah, I mean, there's going to be a need to look in great detail at each and every field on the farm, because I mean, whilst some farms do have quite large uniform fields, there are plenty that don't, and there are plenty, and most farmers will have a pretty good idea of the good bits and the bad bits of their farm. It's just identifying whether and perhaps drilling down into that and understanding why these areas are unproductive, and would they be better off being put into a one of these standards, or actually are you better off cropping the whole field, because you still have to operate the machinery across the whole field, in terms of to get the efficiency. But if you've got a difficult corner that requires lots of turning and what have you, then actually it starts to become a bit more obvious the bits you can pull out. And certainly if it's prone to flooding, or if it's got poor drainage issues and those sorts of things, then that has the tendency to drag the yield down on that part of the field. So whereas you might have said, well, that field gross margin was 700, £800 a hectare. By the time you get into that difficult corner, or the wet bit under the hedge or the wood, the yields come down by half or maybe a ton per hectare. Suddenly, what was a positive gross margin is looking pretty lean. And those are the bits that we can take out. They're not the bits that are going to do the best in terms of producing good bird food, or good wildflowers, perhaps, because they have inherent difficulties within them. But from a business perspective, we have to make money. Farmers are not going to be able to support the environment if they aren't making profits.
Of course.
It's as simple as that. Yeah, if you haven't got a profitable farm business, you certainly haven't got money to put aside to support the environment. And therefore, it's identifying the bits that are profitable to farm and that you can farm profitably, and saying, what can I do with it?
Absolutely, and we were only speaking to some farmers recently, and one of those farmers said that to actually have a green cover crop over his land over the winter, that seed alone was costing him £8,000. So I can really hear that point that you're making. Just coming back, just please clarify for me. So you're talking that the sustainable farming incentive could make up, you said, between 30 and up to 50% at best of what they're getting out of the BPS. So correct me if I'm wrong, but that's a huge gap going forwards.
It is to the big gap. I mean, it requires, what I haven't mentioned thus far, I think, Tony, is that you can stack some of these options. So you could have, for example, arable and horticultural land plus arable and horticultural soils. You would then have perhaps some hedges around that field. You maybe have a ditch at the bottom that you already have to have a water buffer along for leave-out reasons. Well, suddenly, that starts to mount your points up, and your pounds up, and you get towards this sort of the higher levels. But as I said, even at 50%, is probably the top end. It still leaves a significant gap that has to be filled, and this is when farmers have to look very hard at all aspects of the farm business, and try and proportionately reduce the costs across the business. You're not going, if you've lost half of your basic payment income, and previously the basic payment would have made up perhaps 15, maybe 20% of the output of the farm. If you have to try and shave that cost saving off all areas. You can't just look to variable costs and I'm going to put all the savings into there, because all that will do is just drag the yield down further. So you'll try and make some savings from variable costs. You'll try and make some savings from machinery, rent and finance. You might be able to get a saving on there. The difficult one is always going to be labour. It tends to come in units of one, and therefore actually reducing labour costs is very difficult. And not coupled with that, most employees want and expect progressive rise in salary to keep up with inflation, if nothing else. So you're actually putting pressure on less costs than you had before. So the main areas that are left to save from are variable costs, machinery, and rent. You might be able to shave a bit off the finance costs. But again, and good communication with your lenders will help you do that. But the same really applies to rent. There are going to be some very difficult conversations between landlords and tenants who are going to have to sit down and explain to the landlord where the income has gone, and then actually, that there may have to be a sharing of the pain, because if these farmers can't pull these savings back, then their income is going to drop by 50%. Yeah, average over a considerable period, because that part of their income has been taken away. Um, there will be opportunities to replace it as well. We have the same farm incentive. There may be other assets on the farm that can be brought into made to work harder, perhaps. But it's there is no one clear-cut answer for every farming business. It's a question of looking at what you've got, making sure that those costs fit the standard models, and then trying to either to pare those back or find other ways to pull income into the farm. What we can't have, though, is a situation where we found an opportunity to convert some barns into office space or accommodation, and use that to prop up the farming business. One of my new sayings is that the crops are supposed to be in the barn, not supported by the barn. And so this, we had to look at every opportunity that's available to the farmer as the manager of a farm, but also a collection of other assets that are attributed to that.
And that makes perfect sense to me. And I think you've got another saying, Paul, if I can bring this up. It's something about wearing a suit.
I may have mentioned this one. Yes, it's to be fair, I pinched it off somebody else, an accountant friend of mine, whose favourite saying it is, and he asks his customers how often they wear a suit to work, bearing in mind that most of his customers are farmers. To which the answer is predictably not very often, if ever. And he advises them that actually they should wear a suit to work at least one day a week. And when they quizzically look at him and ask him why that is, he said, well, the chances are you won't go out and muck your calves out or clean the grain store if you're wearing your suit. You might just spend some time in the office doing some real work to get the farm in profit. Now, they are his words and not mine, but I have to say I wholeheartedly agree with what he says.
Yeah, and it's a funny, that stirs a memory for me that when I started in farming, actually it was a mixed farm, but the farmer would put on his best suit to go to the cattle market, the local market, and actually talk to the lenders, the bankers, other farmers. And in a way, I guess that was a suit day, wasn't it, in some respects?
Well, it was a business day, and I guess now, to be fair, an awful lot of farm business is conducted, actually whilst, for those that still go to market, when they see their bankers who come to the farm, but also from the tractor cab or the cab of the farm truck as they're driving around, the phone rings. You can sell grain on the phone, you can buy things on the phone, so a lot of that goes on. My concern is that it happens in a slightly haphazard environment, and realistically, the decisions you make need to be based on the records that you've got, and having a plan to see yourselves from A to B. Some farmers have been very good in the past at budgeting and planning how they get their business through difficult times. Others less so. I fear now that the importance of it is significantly increased, because we are entering a period of time when the soft landing that we had from the basic payment, if we had a filthy year for arable prices, or we were locked up with TB and couldn't shift our cattle, at least in December or early January, the government sent us a cheque, and that sort of balances a lot. It was a nice soft landing for us. That's going. That'll be gone, or largely or in total. And that therefore means that we have to plan more carefully for these events. We can't stop the events happening, but if we can sit down and talk to the people that service our business, so to our suppliers and to our bankers and those sort of people, and explain to them what has happened, explain why it's happened, then the chances of them extending credit to tide you over the rough patch is far better than if the bank manager rings you up and tells you you're about to exceed your overdraft. You've lost the game already. You're on the back foot straight away. You're trying to recover a position. If you advise him that actually you need to extend your overdraft and these are the reasons why, and this is how you're going to recover it, then the chances are he'll support you. The banks still largely view agriculture as a very good risk to lend money to. And believe me, they are still very keen to lend more money. So I don't see that changing.
No, and I think everything that you're saying there, well, it seems to make perfect sense to me. That planning and understanding your farm business very much imperative going forward. But where can growers get really good advice from? Because we've talked a lot about knowing your farm, the areas of your farm, and how that's going to fit going forwards. So is it agronomists? Is it farm consultants like yourself? Where's the best source of advice there, Paul?
Well, clearly, farm business consultants are the best sort of advice. But no, I mean, to be fair, it's a combination of that. I mean, there are specialists out there, people that specialise in farm business consultancy, such as myself. There are agronomists out there that specialise in crop production, and whilst we're careful not to stray too far into our other people's territories, the risk is that you do. But and you're wanting to understand how to manage your business better. If you're trying to grow better crops, you speak to your agronomist. If you're trying to control your cash flow, you're trying to control your costs, then speak to your farm business consultant. If you're trying to control your tax issues, speak to your accountant. Work out what it is you're paying these people to do, and just make sure they do it for you. But the first thing you probably need to do yourself is to do some very basic benchmarking on your business, to try and identify the areas where you may have problems. And there's a very simple equation that I've used, and people like me have used for an awfully long time, which basically says that you look at everything as a percentage of output. So your variable costs should equate to somewhere in the region of 30% of your output, labour and machinery 34%, rent and finance 17%, other overheads 6%. That leaves you with 15% profit. If your costs fit into that quite well, then actually you've got a well set up business. But invariably, when you drill down to them, and accounts can be a little bit misleading because there are some things in accounts that aren't always as transparent as they could be. But people will know that. But look at that. If you find an area that's outside of that, then you immediately got somewhere that you can start to look at and try and improve that area of your business.
Yeah, and as we come towards the end of this podcast, what would be your advice to farmers to pull all of this discussion together? What would be your top tips?
I mean, the first thing that I would do if you're not already doing some financial modelling is to sit down and do that internal benchmarking. Make sure that you've got 30% variable costs, 34% labour and machinery, 6% other overheads, and 15% rent and finance. If your costs fit into that structure, or if they don't, you start to know where to look. And that really is the first step. And take the last 3 years sets of accounts, run it on each set of numbers for those, and that will give you a very good starting point. If you haven't got the starting point for your business, if you haven't got the beginning of a plan, when things start to go wrong, how do you know what's gone wrong, and how do you get back on track, as it were? So if you did nothing else than do that would at least target your attention onto the area of the business that's causing you problems. I would to go beyond that, you need to start actually budgeting and forecasting. There's a plethora of data out there on gross margins. I produce for Agri 100 and something gross margins on an annual basis for various crops at various yield types. All readily available to any farmer that wants them. We're more than happy to share them.
Thank you, Paul, for some very wise advice indeed when it comes to the Sustainable Farming Incentive and how perhaps we could be looking at our farm business enterprises with an even keener financial eye. That's it for this podcast, but do tune in again as we meet the experts throughout the season, exploring the many immediate and longer-term questions for growers and farmers in the UK. If you have any questions that you would like us to ask the experts, email info@agri.co.uk. See you next time.